that require money. Remember, even small amounts of money saved regularly can add up to a significant amount over time. So let's check out. Hello, everyone. Welcome to the show where we learn how to manage our money. Today, we are going to talk about what is a savings account and why you need one. But before we start, don't forget to like this video, subscribe to our channel, and hit the notification bell so that you will never miss out any of our videos. Let's get started. So, what is a savings account? A savings account is a basic type of bank account that allows you to deposit and withdraw money, but it earns a small amount of interest depending on the amount of money in your account. So, when you put your money in a savings account, you can earn extra money called interest without having to do anything. Let me tell you a story. Once upon a time in Cambodia, there was a university student who lived far away from home. He studied very hard every day, and his parents gave him $50 each month as an allowance. He used some of the money to buy books and pay for transportation to school, and he had a little bit of money left over each month. At first, he kept all the money in his wallet, but he was worried that he might lose or spend it all on unnecessary things. Then he remembered that his parents had told him that they had opened a bank account for him so that he could save his money. He decided to go to the bank to ask his parents for their bank book so that he could check his balance. When he arrived at the bank, he met a friendly bank teller who asked him, "Can I help you?" The student said, "I'm here to collect my bank book. My parents opened an account for me, but I have never used it before." The bank teller smiled and said, "No problem, let me get that for you." She checked the computer and found the student's bank book. It showed that his account had a balance of $0 because he had never deposited any money into the account before. The student thought for a moment. He realized that he needed to put his money into the bank account instead of keeping it at home. So he said to the bank teller, "I would like to deposit $300 into my account." The bank teller said, "Okay, let me help you." She gave him a deposit slip, and the student wrote down the amount of money he wanted to deposit. He then handed over the cash to the bank teller, and she gave him back his deposit slip with a receipt number. After that, the student went home and took out the remaining money from his allowance and deposited it into his bank account every month. Let's see how much money he saved after 6 months, 1 year, and 2 years. After 6 months, he had saved up to $1,800. After 1 year, he had saved up to $3,600, and after 2 years, he had saved up to $7,200. But that's not all. Because he kept his money in the bank, he also earned a small amount of interest. For example, if he deposited $100 into his savings account, he would earn $1.50 of interest after 1 year. If he deposited $500, he would earn $8.75 of interest after 1 year, and if he deposited $1,000, he would earn $17.50 of interest after 1 year. We can see that the more money he saves, the more interest he will earn. In our story, the student didn't know how much interest he would earn after 2 years because it depends on how much money he saves each month. But if he keeps depositing money into his savings account regularly, he will have a lot of money in his account, and he will also earn a decent amount of interest. If you want to become financially independent and achieve your financial goals, you need to start saving money. We understand that it can be challenging to save money as a student because you may have limited income and various expenses. However, by setting a savings goal and tracking your progress, you can stay motivated and achieve your savings target. You can also consider opening a savings account to make saving money easier and more convenient. By consistently saving money, you will have a safety net for emergencies and be able to take advantage of opportunities that require money. Remember, even small amounts of money saved regularly can add up to a significant amount over time. So let's check out the benefits of having a savings account. The first benefit is that you have a safe place to keep your money. When you put your money in a savings account, it is kept in a safe place where it cannot be stolen or lost. This gives you peace of mind knowing that your money is secure and can easily access whenever you need it. The second benefit of having a savings account is that you earn a small amount of interest. Interest is a fee paid to you by the bank for keeping your money in your account. While the interest rate on savings accounts may be low compared to other types of investment accounts, it is still a great way to earn passive income and make your money work for you. The third benefit of having a savings account is that you can easily withdraw your money at any time. Unlike some other types of bank accounts, savings accounts typically allow you to withdraw your money at any time without any penalties. This makes it easy to access your money in case of an emergency or if you need to make a purchase. The fourth benefit of having a savings account is that it helps you develop good financial habits. Saving money is an essential part of financial responsibility, and having a savings account can help you develop good financial habits early on. By setting aside a portion of your income each month, you can build a habit of saving that will benefit you throughout your life. Now let's check out the differences between keeping cash at home and keeping money in a savings account. To illustrate these differences, let's look at the following example. Imagine that you are a university student who receives $50 from your parents each month as an allowance. You decide to save a portion of your allowance in a bank account. Here's a comparison table showing the differences between keeping cash at home and keeping money in a savings account. We will assume that you save $20 each month. As you can see, keeping cash at home may seem like the more convenient option, but it comes with risks such as theft, loss, or spending. On the other hand, keeping money in a savings account offers greater security, earning interest, and the ability to track your savings. Here is a chart showing the total amount of money you will have after 6 months if you keep cash at home or keep money in a savings account. As you can see, after 6 months, you will have saved $120 if you keep cash at home and $139.50 if you keep money in a savings account. That means you will have $19.50 more if you keep money in a savings account. This shows that even though the difference may seem small at first, it can add up over time. Additionally, by keeping your money in a savings account, you will also earn a small amount of interest. This can be a great way to make your money work for you and help you achieve your financial goals. So, do you already have a savings account? Comment yes if you do. Having a savings account is the first step to building financial discipline and independence. It is never too early to start saving. Even if you are a student with a limited income, you can still save money by setting a budget and tracking your expenses. If you have enjoyed this video, please give us a thumbs up and share it with your friends. Don't forget to subscribe to our channel so that you won't miss any of our videos. You can also follow us on social media to get more financial tips and resources. Thank you for watching, and see you next time.